Good morning, good morning. Welcome to the Trading Syndicate. I'm JJ, and this is where we try and succeed to help regular people make a living in this crazy business. And crazy it is. Definitely crazy. Yesterday was one of the most interesting days I've seen in a while. We have a situation where the overnight inventory was long and did not correct at all. And I don't think I've ever seen a market where we had a 50-point supply gap above us fill in one day. I don't think I've ever seen that. I've seen some crazy things, but that one that's a new one. Hey, Moran. I can't remember the last time we had a gap of that size fill in one day, especially to the upside. And that tells us a lot about the market conditions that we are doing business in. And I think a lot of people, unfortunately, lose money because they have no idea or are completely aware of the type of conditions that they're doing business in, which is really strange because in any other business you kind of look around and go, hey, does this make sense? Should I be selling swimsuits in Canada when it's minus 45 in the winter? Probably not the best idea. Instead of selling like hats and gloves and stuff like that. So the same is true of shorting a market where there's limited supply. And this market, if you haven't figured out it's got limited supply yet, I don't know what will convince you that it does, right? The conditions really aren't terrible, Mike. The business conditions just you can still make money. You just have to trade with the conditions, right? Uh, the markets are always going to be. Yeah. Hey, Rufus, how you doing? John, Mike, Rasto, hey, Jiraj. And welcome to the folks on YouTube. So, yeah, filled the gap yesterday. Tonight, overnight inventory is, believe it or not, short because the blue area is underneath the close. So inventory is short. That's why it's creeping higher, right? We have a spike in the end of the day where the market spiked in the last hour of aftermarket trading. So there's some levels here where if we do get liquidation, 59 will be one, and then just here, I think around 54, well, you'll be looking for bids if we actually get down there, right? So right now it's creeping to the upside. Let's go take a look at it. If you zoom out, you'll see that the buying retention was pretty good. I mean, really, when we came down here, all of this inventory, not all of it sold out. A lot of the people who were long up here are still long. So we're still in the front end of the move, folks. It's funny because Friday, I never saw so many Friday and over the weekend, I saw all these people talking about, oh, it's a bear market. I'm like, how did it go from trend up high records to a bear market in one day? Was what did I miss? How do you go from I don't use bull and bear, and this is the reason why I don't use those words because they're very biasing, right? You have one day of liquidation and everybody thinks that the market's falling apart, right? And so how do you come up like who thinks like this, right? What kind of common sense is there? It's a liquidation break, right? It was just a liquidation break. That's all it was. And it was a good one because it flushed all the weak hands out into these bids here and then right back up. What's the difference between saying I'm bearish or short biased? I guess not really any, John, but I don't use the words bearish and bullish because they mean nothing to me, right? How we know that the long inventory up there didn't sell? What was Worm? Look, how many days you got? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Okay? How many days here? 1. If you added up all this volume, is all of that volume traded yesterday? You know what I mean? Say this is, say these are, you know, a million contracts every day. 1, 2, 3, 4, 5, 6, 7. Right? There's millions of contracts up here. What was yesterday's volume? And now we're right back up. So if we had traded 8 million contracts, maybe. What did we trade yesterday? A million. No, it's pretty simple, Mike. You don't need to know the exact answer. Just look at all the volume, right? There's, there's a bunch of volume up here. There's just one day down here, right? It doesn't take a rocket scientist to figure out that all the volume didn't dump out. That's buying retention, right? I've been saying now for 5 years that the markets have limited supply, right? Why do they have limited supply? Because they're built to have limited supply. We have, you know, a revenue generation model which is built on assets under management, and we have low interest rates. Put 2 plus 2 together, which makes it a very difficult environment for short sellers. There's that end spike from yesterday, right? So that 55 level, the overnight low, there's tons of bids down here. There's no way any of them were getting filled in the overnight. The cost basis for yesterday is here. I can remove this, get rid of that gap. I just kept the gap fill here just for curiosity to see if we can get down there. So right now we are one time framing up. And tight balance zone because it's a tight range. 63.5 to 66. Double it to 71. And now we are in 4 times cost basis or 4 times profit. And you double it again, it'll be 81. So As long as we stay over 71, right, we'll rotate higher. So at first, if it's slow, if the order flow is slow, we'll take where's the product? The product's between 63 and 68. We're going to take that and we're going to sell it from 70 to 76. Okay? And if we get enough buying when London opens, we will take out that overnight high and start hitting the upper levels. So I would say 63.88 and 3/4 is our target for the night. And the short squeeze continues, ladies and gentlemen. We squeezed prices into month end. We squeezed prices into the Fed day. We had one liquidation and right back up. So, considering we have four gaps underneath us which have not filled, and we filled a supply gap above us in one day, that should really make you think about how markets are going forward, right? And it's thin. It's thin tonight, which means any kind of large order is going to move price quite substantially, like we just had in this last minute candle. Any questions? Yes? No? Maybe? You guys all still shocked by yesterday? I should have been long 71, 72. Oh, yes, definitely trade maker. Most of the buying was short covering yesterday. Now the problem with that is, yeah, we need like some sort of an event to create a sell. But you've seen this market over, like you've been with me for a while, right? So we've seen over and over again how, like it was a house of cards until Friday, knocked over the house of cards, but the foundation of the house of cards is still there, right? You know, Mike, it's been that way ever since they changed the rules about short selling in 2005, right? That was when they laid the foundation for the general structural change in this market is when they introduced regulation. Yeah, exactly. Regulation SHO. When they introduced that in 2005, they create a structural shift in how these markets. Then you just had low interest rates, and then we went from a commission-based revenue model in capital markets to an asset gathering revenue model. Combine that. No, market makers don't have to locate the stock, right? Because they have to provide liquidity, right? But everybody else does, right? See, for the longest time after 2005, right? What we do is, in order to avoid locates, we would use a market maker's inventory to hold our shorts. You know, when they used to have small market making firms, that doesn't exist anymore, right? But you had all these small kind of mom and pop market making firms. So we'd use like if we wanted to short, we would use the market maker would let us use his inventory, right? And we could hold a short position as inventory. And he would say he's just providing liquidity. But that didn't last too long. Really, shorting a market with yeah, you see, so you don't have to locate. He just holds the short for you and then books it to your account. I mean, it really won't stand up under audit, but so as we creep up to that overnight high, if you're long, that's your first area that we're looking for some kind of a reaction. Yeah, let me sell your house without actually owning it. Yeah, shorting is a different concept. It's a hard way to make money in a market that has no supply. It's really hard to make money shorting when there's no supply in a market. So really, the only way to trade nights like this, they're hard to scalp because it's so choppy. What you got to do is you got to build a position and then sell into it. So, hindsight's always 2020. If I had built a little position between yesterday's high and 72, maybe 4 or 5 contracts, and then sell them as we get over 73 to 74, 75. Right now, let's see if we can come back and hold 70. Now, why am I focused on 70? Because it's yesterday's high and it's just above the close. And here I was all excited yesterday. I was like, oh, okay, great. I thought overnight inventory was long. We were going to correct it. I'm like, wait a minute. It's not correcting. Wait a minute. Wait a minute. Yeah. And then early in the day, we were laughing and going, wouldn't it be hilarious if we filled the gap to the upside in one day and then next thing you know, gap fill, right? How many people do you think are short under 6,300 and then under 63.29? I would say a crap load, right? No, I'm just saying, can you imagine how many people shorted this market yesterday thinking that we were going to get follow through selling, right? And thinking that overnight inventory was going to correct. I wanted to short overnight inventory correction on the open, but then we just opened and drove straight up. It was like, whoa, wait a minute, right? And even if you rewind it, you will catch me talking about shorting because I was biased. Because all through the day I was looking for a correction, which never came. So when that happens, right, you have to say, holy cow, you know, I'm expecting a correction. Everything is long, overtly long, but there's no correction to the inventory. Why? Right? Well, because when there's no correction to overnight inventory, it means that somebody is really trapped the other way. Right? So if inventory is long and it's not correcting lower, it means somebody is really got a desperate appetite to buy. Does that make sense? That's how you let the chart. So I'm short biased, right? Hey, Cisco, welcome. I'm short biased, right? But the market keeps going higher. That doesn't mean I should be more short biased. It means the market's trying to tell you something. Yeah, and those inventory corrections are good to get long into. Why would you be short biased? John, we'll have to do a session on this because I've answered this question a bunch of times and I don't think I'm explaining it properly. Why would you be short biased? Because inventory is long. So every time we've had a morning session, if you go back and you look at your notes, you'll see that you've asked me this question. So I'm obviously not explaining it the right way. So let me try and explain it better. Okay? I'm going to go put in the overnight session. So this, here's the close of from the first. Okay, John? Overnight inventory is long. Okay, above the close. So normal business operations, that's the normal thing to happen. When that doesn't happen, it means that the market is strongly bid. Does that make sense? Right? So there was also a poor high here, right? So we had a poor high, right? You have a poor high, so there's clues, right? Like your Inspector Clouseau, right? There's a poor high, and inventory is long. So you're looking for this. That happens 60 to 70% of the time, according to Stadelmeyer, who invented market profile. So when that doesn't happen, right, and the market does this, it means that people are trapped short and bidding the market higher. Does that make sense? So your natural tendency to have short bias is because of the business conditions you see when you enter the market. Now, when that bias shows that you are wrong, you have to turn around and trade with instead of fighting it. So does that make sense? Why I was short biased? So had we come in, let's do the reverse. Had we come in and overnight inventory was short, here's the close. Say overnight inventory was short, we would look for a move up. Now, if that move up doesn't happen, that means there's a lot of selling pressure in the market. Right? Does that make sense now? Why you're short biased? That's why we every morning we say overnight inventory is long or short. So tonight overnight inventory is short, and we're getting the normal move higher off of that. No, relative strength is an indicator. RSI. It has nothing to do with inventory. None of the technical indicators that you guys see or use have to do with inventory at all. What is the business reason for the inventory correction? The business reason is that the market's not actually open. So what their business reason is for that, it's a good question, is this is during the night, right? So regular trading hours means that the larger businesses are open. And their theory is that if the large traders were around, inventory wouldn't get so whack out of, there'd be more sellers, right? So they expect that when those regular traders come in, the big traders, that they'll sell this down, right? Because if you were long here and you came in and prices were much higher, you'd automatically start to sell into this, right? But why wouldn't you? What would keep you from automatically selling hard if you saw a bunch of people lined up to buy? Then you'd raise price, and if they follow you, it's even better. If they don't follow you, you can always bang it down because your cost basis is here. Does that make sense? So normally if I came in and I had 5,000 contracts here, right, I would just, like as Bobby Axelrod would say, I'd be banging them with both hands, right? Be selling everything. You'd be like, could I bid you? I'd be like, sold before you even say the quantity. I can show you a bit sold, right? But what if I come in and I see a Walmart parking lot just full? I see people pressed against the door pushing to get in. Oh, I'm going to raise price. And so is everybody else because we've all been trained the same way. Right? And that's why inventory corrections happen and that's why they don't happen. And that's what we have to be aware of. Because sometimes the market won't do what you expect it to do. Right? So when you expect it to do something, right, and it doesn't, the market's trying to tell you, hey, wake up. Something's different. Business is different. Right? Hopefully that makes sense. Well, I have no idea what to expect when London opens, Nate. That's the only thing that has helped me in trading is to pretend I'm an idiot. I'll have a plan if it does one or the other. Right now, there's no trade for me because I like the look below and fail, the look above and fail at extremes. So the market's in a barcode right now. I have no idea what's going to happen. So I'm just going to sit and watch. London usually likes to get lower, right? Likes to get some cheap inventory. If it can't, then you know the market is bid, Nate. There was another half-hour TPO lower than the one you showed. Cost basis, John, is where the volume point of control is. So it takes a number of half-hour TPOs to create a cost basis, right? Because it takes time to gather supply, just like it takes time to distribute supply. Make sense? Exactly, Windmill Willie. Reminds me of Boxcar Willie. Raise price means, yeah. Raise price is if I've got a bunch of contracts and I see you're desperate to buy, I'm going to raise the price. Just like a market, right? You've got a 1967 Corvette and you got 300 people waiting to buy it, right? Now all of a sudden instead of 30 grand, you can charge 50. You get a bidding war, just like in real estate. Okay, here's London. Let's see how low can London get down to 70. Jeez. Talk about a barcode pattern on the chart. Look at that. If you were quick, you might have been able to get a contract at 73 or 73 and a quarter. Let's see. But that's not an A plus setup. So what did London tell us, Nate? John, cost basis is time and volume traded, right? What did London tell us? That the bid is right here. Right? The bid is right there. After a while, you'll start to see positions, right? Little position here, distribution here, right? And we came right to the top of this little position. Now, if we break that, that means we don't have enough buyers and we'll come down to test 70. Otherwise, we'll rotate higher. And don't worry about it, John. We'll go over that when we do a one-on-one. It's just time and volume traded. Think when you go to Costco, say you had a convenience store, John, there on the Big Island, and you went to Costco to resupply. Well, you're not going to buy everything in like 10 seconds, right? You got to go through the aisles, right? And pick up your inventory. That takes time, right? Yeah, if you are short, Alexander, yeah, your stop is 75 and you're looking for 70. Yeah, the sellers get more aggressive when the VPOC moves higher, right? Because when the VPOC moves higher, it means it's good distribution, but we have competing sellers. After some time, people will start to compete. Yeah, it's not guaranteed, right? I just like to see the point of control move up to say, oh, it's good distribution, right? When they're done distributing, they'll generally, well, I shouldn't bias you, but usually after a good distribution, there'll be a sale, right? Just like anything else. I think your computer needs a holiday, Mike. Could you pick a chart from say 6 years ago and look at the TPO chart? Hell, yeah, you can, John. You can look at a candle chart. Hang on, I'll show you. Check this out. Here's Palantir, right? So if we go back to 2020, John, in Palantir, oh, right? Can you see? There's the cost basis. It's right here, right? And then there's the distribution, right? So that's Palantir, right? So hey guys, if you're long, just remember, make sure you sell into strength, eh? off that inventory correction. If you bought the 73s, put them out. Put them out. Right? There's Palantir. Just want to flatten that. Okay, I'm flat. All right, there's Palantir. NVIDIA, you can go back. You can see the cost basis here, 117, right? Tesla, you can see different cost basis as I just running this back. Right? You can, yeah, you can definitely see cost basis on. Here's Amazon. You can see the massive cost basis down here and the really big one down here under $100. And then the distributions, right? Never heard of NMAX, right? Crabapple, same thing. Just run a weekly chart. So you can see the cost basis, John, right? All you got to do is run a a volume profile, and you can see cost basis. This is what retail traders call large volume nodes. It's just the cost basis, right? It's, it's interesting. You could, you know, works all the time. Works on any time frame because remember it's all just a market, right? Just all we're doing is buying a bunch of cheap crap, right? Marking it up, putting it on sale. When they don't want to buy it, put it on sale and drop the price, right? Just get them to buy it. Do whatever it takes. Remember Glenn Gary, Glenn Ross, John? Get them to sign on the line that is dotted, right? Move that inventory. That's the whole thing with markets, right? The whole reason that a market exists is for us to sell you something that you don't want. And the more of it that we can sell to you, the better. Right? Just get it out the door. Right? That's all we care about. There's a poor high. That's a double top. Well, let's see if we can break that. Right? Just move the inventory. I swear to God, the best way to learn about markets is to work in a boiler room. You learn so much about how to sell things to people in a high pressure environment. And then you understand how people react to price. It's fascinating. There's a little bit of a breakout. Next level is 63.79 off my longer term charts. I think we're done with earnings now, aren't we? What do we have left for earnings? So all the big companies are done, aren't they? I should take a look. What do we have for news today? Market Watch. Oh, Leather Jacket guy still hasn't put out earnings? Okay. U.S. trade deficit, S&P final services PMI, and ISM services. That's a pretty calm week. And if you're wondering, I mean, just read the headlines. U.S. listed ETFs attracted $121 billion in July, pushing their total this year to $677 billion and putting them on pace for a record 1.3 trillion in 2025. That's a lot of cabbage. All that money's got to go somewhere, right? Investors keep piling into ETFs. Money just keeps piling into this market. That's right. Nvidia is always late, isn't it? Not much for trading here. Picking off longs on scalps, really. Yeah, light news. No drama this week, Raj, except a nice big old short squeeze. No, not coming over, Raj. I know your mom will put me to work. Ugh. Let's see. Any other questions, folks? I'm telling you, we had one day of liquidation and then right back to it. Hey, Spicy, how you doing? Yeah, Bitcoin treasury. That's already started, Alexander. Every public company has a Bitcoin treasury now, right? Any trade setups? What do you think, Sniper Kid? I got nothing right now. You want to try and short it down to 70? You could. Your stop would be 75. But I don't see a trade setup right now, so maybe go back to sleep, get some rest. No, the volume pot cannot be used like VWAP to identify direction. Good question. No. All the volume POC shows is accumulation and distribution of the product. Yeah, this is distribution. So remember I said you could short it down to 70, right? If you were short 73, you'd put a stop at 75, where that white line is where it says sellers. Well, right now, AO, nothing surprises me. But we'll see. Right? I mean, yesterday was a pure and simple short squeeze, nothing else. So it's not like, massive institutions are in there buying and then adding to their positions, right? So it could come apart like a cheap suit, right? You just have to watch and see. Yeah. How do you know when it's a short squeeze? Well, there's 71. Market profile tells you, number one. Um, and like 33 years of doing this tells you. But it's pretty obvious. When you have a 50-point gap above you, spicy, and it fills in a day, it's a short squeeze. There was no reason to come in and buy the market yesterday. As an institution, like, there was a bit of a sale, so that prompted some buying. But the explosive move higher yesterday definitely tells you it's a short squeeze. So, John, let's go into your question, John. What's the business reason? What are you looking at my screen? What does that say? Okay. So if you know that there's a seller at 75 and Sniper Kid was looking for a trade setup, the only trade setup I saw was shorting it down to the previous day's high and using 75 as your stop. What's the business reason, John? What's going on here? It's not vague at all. So you identify that there are sellers. You identify that sellers are competing. What is the business plan when sellers are competing? Short, right? So there's a wall of selling here. The sellers are competing because the candles are doing this. So what's the business reason? The business reason is too much supply. It's not an A plus setup, John, but do you remember how we had this conversation before of how I told you people will just come on and ask for a trade. And if I don't give them a trade, they stop watching the YouTube, right? So given on the market conditions that occur at the time, I have to give them something. Do you understand what I'm saying? So based on the market conditions at the time, the only trade I could see was a short down to the previous day's high. Do you understand the business reason behind the trade now? Because when you see competing sellers, the only trade that exists is a short. Where do you put your risk? You put your risk where the sellers are. If the seller goes away, then the trade does not make sense anymore. The business reason for the trade disappears. So is that clear? Right? I can't run a YouTube stream and tell people just not to trade for an entire hour. An A plus setup occurs when you take it from the edges. So for example, Spicy, if we went under 71 and came back above it, that's an A plus setup because it's a look below and fail at the edge, right? So there's the previous day high. So that's just like I called it. You're shorting 73, 74, stop 75. and you're looking for 70.71. You're not blasé? Well, it's 3 points, John. I don't know what to tell you. He asked for a trade. I gave him a trade, man. I don't know what else I could say. Right? It's like I can only do so much. I'm not a magician. Right? Okay. You know, he asked for a trade based on the business conditions. I gave him a trade. I don't know what else to do. Right? The trade worked. So, yeah, I'm okay. Right? All right. Moving right along. And now, if this liquidation continues and we accept under the close, let's see if we can get down to that overnight point of control in that area where the cost basis is, or at least back down to VWAP. Oh, yeah, let's see what happens next. And we're just dropping right back to VWAP. Yeah, it's not, you're right, Spicy. It's not exactly the best trading conditions. Okay. Well, the problem is after a big short squeeze, the price action is really quite bad. There you go, AZS. Well done. Need some sideways motion, right? Oh, they are good trading conditions. But you do have to take what the market gives you. Uh, oh yeah. I lose money trading. I just don't lose a lot. Some so my the way I view business and the way I've been taught is you're not going to make money every day, right? There are days where yeah, yesterday I think I made 200 or $300, right? I didn't trade well yesterday at all, right? And I was lucky to make what I made because I was undisciplined and I was unfocused, right? So it was a good day. Had I been positioned long all day, it would have been great. But I wasn't. I wasn't shorting it, but I just wasn't. I wasn't focused, and I was working on some other stuff, so I was distracted. My discipline wasn't great, right? So my whole thing is if I can't make a lot of money, I won't lose a lot, because so I can be in business tomorrow. I don't mind not making money for a whole week. I could give a crap as long as I don't lose a lot. Capital preservation is everything. Got to be in business tomorrow. It's all that matters to me. Yeah, stopping is a good, once you're up a good amount of cash, you just frickin' step away from it before it takes it all back. I know a lot of people are like, well, if you worked at a prop firm, well, you're not working at a prop firm. You're sitting in your basement or you're sitting in your kitchen until you develop the skill to hold trades longer, to size up, to continue trading. Most people don't have the concentration to trade a whole 8-hour day and keep trading. Take the money that you make and get out. uh, do you need to learn economics? Dear God, no. That'll only mess you up. Trading is about two things. It's about inventory and it's about the order flow, the flow of customers that come into the market. That's all it is. It's training yourself to have good business habits. You do not have to be an economist to be a trader. In fact, it'll screw you up because you're going to overthink stuff. Alrighty, folks. That's it for me tonight. Have a great morning, and we'll see you at 9 o'clock during our RT8 session. Thank you very much for being with us. Cisco, welcome to the room. Aloha. I'm just going to message you. Good to have you with us. Thanks, everyone. And we'll see you at 9 a.m. Eastern. Trade smart out there. Bye for now.